afternoon, everybody. Welcome to Trader Merlin. It is your Wednesday Hump Day edition. Hope you had a good session. Wildness as usual. Just there's always something crazy going on. Today, lots of big gap downs and big down days for stocks we talked about yesterday and talked about profit taking on. So good. Hopefully you guys took some profits on some of those positions. But we'll start things off with the all-time highs. Bulls back yet again. I've been doing something with a colleague, Jeremy. We got a new guy working with us named Jeremy. He's doing some visual video editing and production and social media help. So we've been doing a bunch on TikTok on our Online Trading Academy's TikTok page, where every morning I'll release like a quick, here's what's happening today, here's what to watch out for. And one of the big things we talked about, at least I brought up, was this pattern right here. Now I know this is the futures. If we look at SPX, we get a slightly different picture, but this is that S&P 500 chart that has been on everybody's mind. And that high from the 24th of January was 6,162 and a quarter. And today we hit 6,166 and a half, which means we have breached and officially made a new all-time high. Now the challenge for the markets is, can we hold it? All right, this is also a closing all-time high, intraday high, but we didn't close above the highs. So the tail I have there, which you guys can see, was 6,162.25. Yeah, we broke it, but we didn't close above it. So I still feel like this pattern is absolutely in play, even though it's so exciting. All the headlines are, markets made all-time highs. Well, not the markets. This market made all-time highs. And, of course, I have that wonderful little, I don't want to say clickbait, but, I mean, you can say the markets made all-time highs today, although not very convincing. And the way that this turns out, the candle formation for today, you have this small little green real body, topping and bottoming tails on it. So really no clear sense of direction other than a slightly green body to that candle, meaning upside potential. Exactly, Steve. S&P was the only one. And I know a lot of people were messaging me talking about, all-time highs in the markets. And I think, well, yeah, it is for the S&P. But if we look at the Dow, here's your Dow, not at all-time highs, right? Now close. Actually, now got a nice little pennant formation happening right now on the Dow, which of course is of interest. Then you look at the NASDAQ 100, which is close, but not quite at all-time highs. Doesn't look as good, although I did draw a similar formation by, going through these highs that peaked on December 26th, as well as January 22nd, and we came into that on February 13th as our third attack. Now just broke and sitting there. This is actually very positive because we broke above overhead supply and now your retest is sitting right on it. So this actually is pretty darn good from a trend perspective for the NASDAQ. We'll get to more about the NASDAQ and its design here in a little bit. But all in all, this pattern actually is relatively positive for me anyway because it's holding that breakout. You look at the Russell, which doesn't look great at all. Russell really has done nothing for weeks, so I kind of just stopped talking about it. So really it goes back to the S&P 500, which has a triple top formation. Some may call that a triple top. I would agree. I'm going to draw little lines on here because here's what I think is going to happen. Like I said, in the TikTok video, I said one of two things is going to happen. We're probably going to see kind of a little sideways consolidation, come back down to that uptrend line, and then start to move higher and retest, therefore making almost a quadruple top. Or the other choice is you end up getting a break with conviction over the next couple days, and this thing really starts to sizzle to the upside and have some big moves. Now, the challenge for me is trying to anticipate which one's going to happen, right? A lot of major news has been happening. You've got the Trump tariffs are in play. You have the FOMC meeting minutes, which came out today, and I don't know if anybody read through it. I've been doing this habit of I'll take the FOMC meeting minutes, which is like 20-something pages of documentation, and I throw it into ChatGPT and I say, just give me a quick summary of this. Bottom line is the FOMC meeting minutes showed that they were in no rush to cut rates, even though you have Trump insisting that rates drop. Now we know that his talk track has shifted a little bit more towards the long end of the yield curve, meaning the 10-year. Fed, of course, is going to manipulate that short end. So if we look at the impacts of that and kind of how likely that is going to go down, well, the Fed has said we're in no rush. We're in no rush to bring rates down. So if we go to our FOMC Fed funds futures, I'll bring down here just a hair. Let's see if things have shifted. So right now for the May 19th meeting, which is going to come up here in just about a month, we have a 97% chance that things are going to stay right where they're at. For me, the concern and interest is what happens to the end of the year. And right now, the expectation is that we're going to see one rate cut between now and the end of the year. I should do a poll. Let me do a poll here before I give you my answer on this one. I'm curious what you guys think. I'll start a poll. Let's see. Ask a question. How many rate cuts CS by year end? EAREND. And I'll put 0. We'll go 1. Add an option. We'll go 2. And then I'm going to actually put a third one here that says 1 increase. So there you go. There's your poll. Let's see what you guys think about that one. Submit your vote. Even if you're bored to death, don't like the topic, just click on what you think would happen. I'm just curious to see the result here. I've got 0, meaning no change between now and the end of the year. 1 rate cut, maybe 2, or possibly even a rate increase. Totally up to you guys. Put it in there. Let me know what you think. So here's where I'm going with it. The undertones from the FOMC meeting minutes cited inflation, and they were unsure whether Trump's actions with the tariffs and the mass deportations are going to have a significant impact on inflation. It felt like the undertones were that the FOMC is concerned that it could have a profound impact on inflation down the road, but they just don't know at this point. Therefore, no reason to lower that interest rate as of right now. So I'll let the poll go here for a little bit longer. Really, how many do we got here? That's it? 20? Okay. Well, I guess we got half of you. Half of you voted. I'll give you another second. So everybody get in there, click that vote. I want to see what you guys think. I'm going to put myself, I guess, right now as a minority in this poll. So I will end the poll right now so you guys can see what it is. I don't think we're going to get any rate cuts this year. I think it's going to remain flat. If anything, I actually think we're going to get a rate increase, 1 increase this year. So I'm going to put myself in that 0 camp, which certainly is out of line with the voting populace, right? The populace here, as you can see, this is, by the way, Fed Funds Futures, which is a traded security. People are betting on it. Right now, 36% chance we're going to have 1 rate cut, a 30% chance we have 2 rate cuts, a 13% chance we have 3, and a 17% chance of no cuts at all. No chance at all, though, of an increase, which I thought was rather interesting. Maybe that will change here going forward as market continues to develop. So I think that right now the markets are cautious. I think they're a bit nervous because of just the massive uncertainty, which is something I've been pointing out here for some time. And yeah, interesting chart patterns. I didn't see anything here that was really noteworthy. I wanted to short the S&P today, but I just said no. Been in teaching and doing classes all morning, so I kind of shied away from it. And glad I didn't, because it was an up day of 0.26% on the S&P. We'll see what happens tomorrow. If I do see some weakness tomorrow, I may go for a short here and try to capitalize a little bit on some downside move. Again, I'm going counter trend if you're to short this market right now, which is a pretty dangerous thing to do. All right, but why are we at all-time highs? Well, I think it goes back to the election day. I think there's a lot of people that have overall a very bullish sentiment towards what Trump and the administration is doing. And I'll be honest, I do too. I'm bullish on the economy. See, here's the deal. If we can strip down spending, if we can slash spending substantially, then what happens is that eases up our debt obligations. If it eases up our debt obligations, that means the Fed will have to sell less 10-year bonds to fund this operation. If they sell less 10-year bonds and you have the same amount of demand chasing this fewer bonds, then that means yields are going to drop. If your yields drop, that means cheaper cost of capital for businesses going forward. So the long end of the yield curve, if these cuts from Doge and Musk and his team are substantial, then what we'll start to see is a greater impact on that the long end of that yield curve. So I think overall that will help the economy. That will boost the economy. So just based off that. Now, to get to that point, that's the big question mark, right? I think if you factor in all the variables and you say, we're going to slash a bunch of jobs, we're going to get rid of a lot of waste economically from the government level and get back to an efficiently run organization, which thumbs up, I hope that happens. If we get there, then we might even be at a place where we have a budget surplus, which has only time in my lifetime that I recall that happening is under Bill Clinton when we had a budget surplus. Ever since then, it's just been deficit. So I think if all goes according to plan, these changes will have a good impact on the economy and things will look pretty rosy once the dust settles. The problem is the dust right now is like a dust storm from Mad Max or Fury Road, right? Those dust storms are so thick you can't even see 1 inch in front of your face. So between now and that point are just so many unknowns. I'm a big believer that I think the tariffs are going to cause inflation. I think that if we get a significant amount of inflation, they're going to start to raise this short end of that yield curve. And all of a sudden, we could go back inverted again on that yield curve. So a lot of unknowns between now and then. But at its base, the actions should have a positive impact on our economy. Yes, we're going to have some unemployment along the way. That's for sure. If you're cutting a bunch of jobs, doesn't that? Yep, it totally does, Chris. It means higher unemployment. Will those people be able to find jobs? My guess is yes. I think there will be plenty of jobs. I don't think AI is going to eat into the job market for another couple of years to really eat into it. Will those jobs be as high paying as they were before and have all the benefits? Maybe not. But keep in mind, many of these individuals have an 8-month window. Now, I don't know if the layoffs that have been made at like the USAID, et cetera, are those job cuts, here's your 2 weeks, hit the bricks, or are those terminations, here's 8 months like we said you could get, and that takes you all the way into September. If that's the case and these people have jobs paid for until September where they can go transition to something else, then I think the impact on the unemployment numbers will be much less, right? And they will still have money to spend over the next 8 months. One big problem I have is if you lay off a whole bunch of people, then all of a sudden they go into contraction mode from spending because they don't have the money, right? So if all of a sudden they stop spending their money, this could have a profound impact on our economy as well. However, if they're getting paid for the next 8 months, then you shouldn't really feel the impact. So, I don't know. This is all hypothesis on my part. So don't scream at me for my opinions here. I just think a lot of volatility. If we can get past the termination side and those people can be retrained or get new jobs, then I think overall the cuts will actually do a pretty good thing for the economy. Okay, now that I know I've pissed some people off here, let's see what it says. Gio says, Merlin, what about a possible crash in 2025? Look, Gio, anything's possible. When you have such dramatic changes politically, there's always the problem for systemic disruption, right? Things to be changed to the point where they crash or systems are out of whack. And there's always that potential. I don't think it will happen. I think at some point we're going to start to see some weakness. I think the unemployment numbers and the inflation numbers, as I mentioned, will take a toll probably in the third and fourth quarter of this year. But if we can get into 2026, and again, that would be the dust settling moment, then I think we get a clearer picture of will this have a significant impact. And my gut tells me it will have a positive impact on the markets, but who knows? Yeah, you just never know. Let's see. Trump's performance will be measured by 10-year bond behavior. Well, yes, to some extent. Remember, they can manipulate the 10-year bond. Theoretically, they could manipulate the 10-year bond through the printing of money and demand. So if they buy more 10 years, see the situation we have right now is the Fed is selling 10 years, right? So we're moving supply. The Treasury is printing more, the Fed is selling. That's a recipe for higher yields. If Trump can somehow get maybe the Treasury or the Fed to start buying 10 years again, then that creates more demand for those 10-year products, and then the yields would fall. And also, if we don't have to sell as many 10 years, then yields would fall as well. So to some extent, I do think it will be impacted by Trump, and we'll see the results there. There's a possible crash every year. Yeah, true. Steve says, I'm glad they're tightening up on the waste, but $100 billion makes zero difference in the market, not at least $1 trillion before it helps the economy, in my opinion. I agree. But I think we'd also agree, Steve, you got to start somewhere, right? Could you imagine if they said, we're cutting $100 billion here and there. Could you imagine if they cut several trillion all at once? Then I think we'd have a shock to the system and a much more a deepened systemic crash. So, personally, I wish that these cuts that are happening would have a little bit more of a committee a review of it, but that's been the problem. Let's say, for example, we want to cut USAID. And if we wanted to cut certain programs from USAID, it had to go through this huge bureaucracy piece that could take years to come to a decision on something as simple as, do we want to continue to fund transgender education in field mouse in Peru? Right? That type of discussion. We need that? I don't know if we need that. So part of me doesn't like it because I feel like some things might get cut that don't need to be cut. But bottom line is we can always add those back in. So I don't know. It's a damned if you do, damned if you don't kind of situation. But I think we have to start somewhere. Exactly, Big Ed. You got to get to 100 billion before you get to trillion. Now, there was a comment I saw here from Oliver. Hey, Merlin, do you know it's going to have a Doge? Are you going to have Doge ETF so you can $5,000 check? Well, that was my next talk track, which is this one. You know, you heard the talk track from Trump and Elon Musk. There's the potential for them to send every taxpayer a $5,000 check. Look, I think all of us would be stoked to have a $5,000 check just show up in your inbox, right? Yay, right on. Now, the sad part is most people would go do something stupid with it and just throw that money away. I would throw it right into a trading account and just continue to trade that. No problem. Easy peasy for me. However, I would rather that we don't get those checks, right? The point of cutting all this is to save money. Now you're just going to give it to everybody. Does that make us happy as citizens and kind of boost the approval rating of the Trump administration? Absolutely. I'm sure a lot of people will be like, hell yeah, let's go. And as Big Eb just pointed out, now that will create more inflation. Yeah, you give $5,000 checks to the average American, not someone who understands money and wants to save it, but the average person is going to just go blow that right away. I mean, Vegas is going to be packed as soon as those checks drop, right? Chris says I'll buy the Hawk Tua coin with it. Sure you will. I'll go buy the Libra coin. The craziness is out there. Steve says $5,000 check. They need to cut $5 trillion to do that. No, I mean 360 million people, $5,000 checks a piece. Right, so we can just, and by the way, 360 million people, that is all the citizens. That's not taxpayers. So let's say that half of that is taxpayers, 180 million. There's 180 million, and if everybody gets $5,000 checks, you're talking 900 billion. So you need almost $1 trillion to make that happen. Yeah, I'd rather see that money go to better places. Let's pay down the debt first. Now, if we got to the point that we had a budget surplus, and these actions were being taken, sure, cut me a check. But let's get our government in order first. Do you think the markets will remain in all-time highs this year, or do you foresee some great volatility helping our trades? So, Dago, I do a thing at the beginning of the year. It's too late to join now. Sorry, it's past January we can't join. But I do a wager, and we all have to guess as to what we think the S&P 500 is going to be for the remainder of the year and where it's going to end by the end of the year. And, you know, if I was to zoom out and draw a picture of what I think the markets will look like, I think it will look something like this. Bear with me as I try to adjust this picture here. I think what you're going to see is I think you're going to see this market drift higher. I think you'll see something like this. And then I think it'll start to fall. And I do think that you will be down on the year. Let me actually get this exact number here because I think I mapped this one out. Oh, come on, Merlin. Okay, if we go there, I think we'll be down somewhere around this level, which I think the markets will look like this over the course of the year. Now, this is obviously straight lines. You know, I think it could be a little bit different here, but that takes us to the end of the year. And I think that the first quarter will be bullish. The second half will give back some of that. So really the first quarter of the year will be actually probably more like this. But this is what I think the markets will look like over the course of this year. Now, I don't know. I mean, I have no idea how close I'm going to be or not. Everything I'm saying there is just pure speculation off of what I think. And as most of us here know, your opinions about the market shouldn't cloud your judgment. At this point right now, if I'm looking at the S&P, I need to be bullish. I have to be bullish. Why? Because that's what this market's telling you. The market's not telling me it's going down. The market's telling me it's actually going up. So as much as I don't believe it, I still got to be bullish here. Whereas if you look at something like the Russell 2000, this is a different ballgame. You know, Russell's been looking weaker. It's not been able to get back on its feet. You know, for me, I'm going to draw something like this. Just put a little yellow box kind of around this range and say, okay, if we can get outside of this range, I'll be interested in the Russell one way or the other. But for right now, I'm not interested. And this doesn't tell me I should be buying or selling. If anything, maybe doing some spread trades here with options on IWM and collecting some premium. NASDAQ, on the other hand, looking strong. And again, just like the S&P, no matter what I think of tech or all the craziness going on, the trend is your friend until the bend at the end. And, at this rate, you need to stay long NASDAQ. Now, are we slowing down a little bit? Yeah, you're coming towards all-time highs. We'll probably hit that maybe next week. If it holds here, we'll probably hit that next week. And once that breaks, then you're off to establish a new high. So with the S&P and NASDAQ, regardless of what I believe, it most likely, probability-wise, is going to go higher. Now, there's obviously a lot of different factors that can impact this and sway these markets and move them in specific ways. But for now, even though I'm bullish for the first quarter, I could be proven wrong, and markets could start tanking tomorrow, and I'd have to reevaluate. But forecasting out a year is quite a chore. I mean, that's a long forecast to make, but we do it anyway. Did anybody look at the TikTok videos that we create? So every morning, right before the market opens, at right around 5:30 Eastern time, we release a video that talks about, here's what's going to happen today. And boy, there's been some fun stuff in there. And I stumbled across this chart. I know it's been brought up to me in the past, and we actually talked about it as a show here. I remember, you guys might remember this. What would you say? What would you guys put down? If I asked you right now, I said, what do you think over the past, let's say, 3 years is the craziest chart you've seen? And it could be like to the extent of market volatility, a chart moving all over the place, or it could be crazy in the sense of it doesn't make any sense, right? Like, why would this company move like this? I'll bring it up here in just a second. I'm curious what you guys think. I know you guys all have, time in the market and you're always watching different stuff. I'm sure some people. NVIDIA's a pretty darn good one. But NVIDIA, from a percentage perspective, let's say we can go back here into let's go back into September. The low point here, September of 2022 to its all-time high, right? Which is back here. That thing's moved 1,272%, 1,247%, excuse me. Now, everybody in this room is just floored and jaw-dropped that NVIDIA has done that. Now, many of you have been on that gravy train. Love it. I'm stoked. I'm glad you're reaping the rewards of NVIDIA. That's one of the best ones out there. Now, let's go Palantir. Let's go PLTR, which had a very big correction today. And let's go back to that same time frame. Let's go back into 2022. Let's use that as our anchor point. So I will go into the low points of 2022. Palantir, which is this AI darling. Everyone thinks it's the greatest thing ever. All right, I'm going to write some numbers down here. So Palantir is 1,931% gain since the December 2022 lows. Phenomenal, right? So just over 2 years, this thing's up 1,900%. Good Lord, that's amazing. All right, Oliver says SMCI. Yeah, SMCI, totally different with regards to the longer term, which I can look at as well. But really what's amazing is what's happened over the past month. And of course, I just got out of 158% jump in just the past 9 days. Goodness gracious. But let's do the same comparison, go from these December, September lows in 2020. I'll go here to October to where its peak, its absolute peak. Oh, come on. Super microcomputer was 2,278%. Wow. Right? And those seem pretty good. Also, I got oil and negative prices. Okay, Andres, I'll give you that one. Since 2022, though. Yeah, a negative $40 print on oil futures is one that will forever have me scratching my head going, how the hell is that possible? How do you have a negative $42 print? I'll take delivery of the oil. Just put it on my front lawn. Let's see. Certainly M2 money supply. Look at Fred. Is that through let me see. What's up with Palantir? So there was a huge options play today. Someone bought a ton of puts on Palantir, and that's what caused it to crash today. So let me look at FRED:M2SL. No, FRED. Sorry, I'm trying to type in what you got there in TradingView. I think that might work. Bring me up something. M2SL. Yeah, there you go. Now, this is long-term one of the most amazing charts you'll ever see. And let's see, I think this might actually be on regular. If we go to logarithmic, that helps it out a little bit. There's your logarithmic of M2 money supply. M2 is good, but M1 is better. M1, let me see if I can change this to M1SL. That's the chart. That is the chart of like, what on earth? I mean, how do we, you guys have seen this one before. So I'm going to show you one that's a stock. I'm going to add one to the table here that since the lows, I'm going to have some fun with this one. Since the lows of 2022, this stock is up over 7,000%. 7,000%. Can you guys guess what industry the stock is in? Just for fun. Come on. What industry do you think would have moved 7,000%? Pretty crazy. What industry? You guys are going to, this is going to be one of those ones you go, no, you got to be kidding me, bro. There's no possible way that happened. Yeah, it is. No, Steve, not crypto. Not IBIT. You guys ready? Actually, I'm going to bring up the car's website. I'm going to bring up the company's website. And you guys are going to you're going to be like, no way. Here you go. Ready? Drum roll, please. There it is. Carvana. You can go buy used vehicles at Carvana. I mean, this is like a CarMax. It's just, it's just a used car place. Makes it easy. You guys know I'm a truck person, so maybe I can go out here and I'll click on trucks and I'll go and find myself I'm a Toyota fan, so I'll buy myself a Toyota. I'll buy I really want the Tundra. And I can go here, buy a Toyota Tundra, and I can just, click on these and buy it. Check out this chart, dude. I've never seen anything that crazy. It makes 0 sense whatsoever. 7,989% gain from the lows of December of 2022. This isn't NVIDIA that's putting chips in every damn computer in the world. This isn't an AI company that's going to revolutionize the way we think, eat, sleep, whatever. This is a used car company that's on the side of the freeway. I mean, that has to just be mind-boggling. I don't know how that happened or what they did, but I remember us as a group back here saying Carvana's dead. Do you guys remember this? I know I said it, and I'll admit it. I remember Carvana's dead. I mean, I go, this thing's either going to get bought up by somebody or it's just the slow horse of the glue factory. This chart is one of the worst you've seen. Garbage. Got down here to a low of right around $3.30, and then something happened, and all of a sudden, we are now trading not at $3.30. We're trading at $290, something like that. Unbelievable. I saw the Jeep to Carvana worked out. Yeah, I'm sure it's a pretty cool process. It's easy, but I mean, to move up almost 8,000% in 2 years for a used car company, to me, that's crazy. That's mind-boggling to me. If you had asked me that question, I would have said, oh, it's a tech stock, it's an AI stock, it's a micro-cap biotech or pharmaceutical company. No way would I have ever said it's a car company. Crazy. Who owns Carvana? Might be an overpriced PE. Yeah, could be. It could be. I mean, I don't know who the holders are of this one, but anyway, thought you guys would enjoy that. My friend from OTA is the head of finance there? Really? Yeah, you might want to ask him, because I got to be honest. I'm looking at Carvana as this has got to be a short. This has got to be a short at some. Something is propping this thing up. Are they having amazing earnings? Okay, they made 14 cents per share. So, they made 37 cents per share back in 2024 in July. Their next earnings announcement, they made 64 cents. Next earnings announcement, 31 cents. And their earnings are expected, it looks like, May 1st. So, bizarre. Just absolutely bizarre. Totally bizarre price chart. Oliver probably said the same thing I was saying, is that every time I drive the 405 headed towards Huntington Beach, I always see that tower, right? The little vending machine? Yeah, totally. I see it all the way. Anyway, there you go. Didn't you say the same thing about Hood? I did. I said Hood is most likely going to get acquired because of their customer base. Yep. But, you look at those charts, and this is why, let me clarify. You're right, Mike. I did say that, and I'm totally fine to admit it. Also, I say that, these things are in absolute downtrends. They're getting crushed. It looks like it's going into bankruptcy, but at some point, those assets are going to get sold off. So I say once it starts to make higher highs, then maybe you buy into these falling stocks, right? Don't buy in right away just because it's cheap. It has to prove that it starts to move itself back up. That That's my talk track. So I know I've said that many times. And, you know, when would that have happened here with Carvana? Well, it didn't make any highs. No new highs. No new highs. Still no new highs. Right here back in February of 2023 is the first time it actually started to make a new high. So that really, if you were thinking this was a buying opportunity, that was, in my opinion, your point. Your point to get in. Now, of course, you know, what you're going to tell me is, well, Merlin, it was at $3, and now you're telling me I would have bought when it passed this high back here at 12. That's a lot of money left on the table. Yeah, but you need to let these things prove that they can actually get back on their feet and move. Yeah, I know I saw Carvana down 10% on the earnings. Love it. And same thing with Hood. I mean, Hood is another remarkable turnaround story. It really is. Mind-boggling how much that thing's turned around. But when we were back here and this thing was just flatlining, you know, we're saying, look, it's probably going to get sold off. It's doing nothing. You know, once it starts to break some highs, then maybe you buy into it. And that's just that patience game. Because if you tried to buy this, you might have been holding it for a couple of years just doing nothing. So you want to let these things prove to themselves they're back on track. Man, Hood, another one. Let's go see what their gains were just so we can do like an apples to apples. I'll go to the low point here in 2022. To dead low to its peak. Even Robinhood, come on, Merlin, there he is, right about there. I'll go a little higher, just about 1,000%, just under 1,000%. Chad says the Carvana PE is 33,500. Makes you wonder, right? What is going on? Something seems fishy there with Carvana. Not liking it. Yep. And you know, it's funny. I mentioned, I think I told you guys yesterday that I have a good friend of mine who didn't even realize how much gains he had in Palantir. So here's PLTR, right, which is another one that's just been absolutely fantastic, but nowhere near Carvana. And you had that nice rip up yesterday, and we had gone out to dinner, and I was like, you need to sell. And that was Monday night we went out to dinner. So he sold at some point here on on Tuesday, and I texted him today. I'm like, did you get out of all your Palantir? He's like, yep, good. Man, great. And you also had that with Intel. Right, so we talked about Intel yesterday and kind of how it does seem like the highest probability option here for Intel is to be split up, have different parts of that business sold off, and I don't know if some will keep the Intel name or if it gets wrapped up in other brands, but nice big gap down today, right? This is a bearish Harami formation, which does imply that prices are probably going to go lower from here, even with all that speculation on where Intel may end up being. So that was an exciting one. So let me run through our top 8 here. I think, I wanted to talk about one other thing. You know, we talked about the housing stocks the other day, which was Lennar Brothers and Toll and KB Home. And one of the pieces that I'm glued to, and I don't know which way things are going to go. I wish I could tell you with certainty that the 10-year yield is going to go to this percentage point. If I knew that, easy to be a billionaire. Easy. However, markets are always moving. They're always changing. So one of my big concerns is the 10-year. I am in the camp that believes they're going to see this 10-year continue to move higher based off of things staying the way they are. If things stay the way they are, then the 10-year will rally. If we start to see big impacts from Doge and cutting costs and all of a sudden some level of surplus or at least getting the deficit in order, then we'll probably see the 10-year start to sell off. Tough. Which way do we go here? So I saw the earnings announcement today for Toll Brothers. So Toll Brothers missed earnings yesterday, and actually they came out pre-market. They were supposed to make $2.04, and they came out at $1.75. And what do you think they cited as being one of the major concerns for Toll Brothers? It was that buyers are being hurt by rising interest rates, that they're seeing a significant decline in the number of customers if interest rates stay where they're at, which is what we've been talking about for quite some time. It's like at a certain point, that 10-year yield, if it keeps getting higher and higher, will squeeze out buyers, right? You just can't afford it. So right now, if we go here, I'll go and bring up a 30-year fixed rate mortgage so we can see that one. 30-year fixed rate mortgage rates. Let's go check that out. We'll go to the Fed. We'll skip all the banks and go right to, I thought I could go straight to the Fed. All right, I guess we'll use a different one. Let's go to Freddie Mac. Let's do the Freddie Mac, all right? So here's your 30-year fixed rate mortgage for, accept cookies, 30 years fixed rate. It's going to get you 6.87%, so just under 7%. The 52-week range, we've gone from 6% all the way up to 7.22. And here you can see the fixed versus fixed 30 versus a fixed 15. Man, I feel just so, every time I see these, I feel like gloating about the rate I got. And I'm sure many of you do as well. You're looking at these numbers going, man, I'm so glad I'm in at 4%, 3%, some of you at 2%. But the higher this goes, the more Toll Brothers says they're feeling some pain for it. So I was looking at Toll Brothers. I also checked out Lennar, but they didn't have the same impact. They were obviously down a little bit today, which is probably because of Toll Brothers' comments. And I'm sure that they're feeling the same thing. Historically speaking, Steve, you're correct. 6% is not bad. My first couple homes I bought were in the 6% range. It's just now, I guess I'm desensitized to 6. In my brain, I'm thinking 3%, 4%. That's what I got to have. Well, that might be a thing of the past for a while right here. Might be a thing of the past. So, just one thing to keep an eye on. You know how all these pieces are connected. If we do see this 10-year continue to move back to the upside and hold this little yellow box of demand I've got drawn on here right around 4.4%, then I would expect there to be more pain in home builders. So you could look at XHB is an ETF of home builders. It's not home builders, but it's home building. So we looked at this the other day. This has Lowe's and products for making homes, Home Depot, etc. But if you look at, let's say, KBH, here's KB Homes. That's pretty ugly. Down significant. And let's see, PLT, right? No. Which one's Pulte Homes? I always forget the name for that one. Stocks. PHM? Oh, yeah. Pulte Group is PHM. PHM also down significantly. If you look at just Pulte, from their high they saw back in October of 2024 to where we closed at today, this home builder is down 31%. And, I don't know, does this make it a buying opportunity for people, or is this actually something that may be further downside, and now you're looking at maybe this level's way down here at $70 on it? I don't know. Just something to think about. I just don't think we'll get back to 3% unless there's real trouble in the economy. I agree. Well, you know who wants it there, right? The president wants it down there. The president would love to get our 30-year fixed rate mortgage rate back down to 3%, not because of the housing market, which would be good for the economy, but for businesses. Remember, that 10-year impacts a 30-year fixed rate mortgage. Well, businesses may be using 10-year bonds or issuing 10-year debt to raise capital, and if you can get it much cheaper, better off for the company overall. All right, Chad says Carvana had a report close today. Earnings per share 56. Yep. I think the number I saw over here was a bit different than that. Let's see, Carvana. This one's not even updated yet. I thought I had it on here, but let's see if Carvana updated here. Company. Great. Of course, now I'm going to have to just scroll through page after page. See, yep, I agree. 3% mortgage rate would bring out big inflation. Absolutely. Let's see. CVNA. So they were expected to make 24. They came out at 56. So they had a pretty big beat on earnings. Pretty big beat for Carvana. And they were down 10% after hours. I love that. Man, I just don't see this sustaining itself. I feel like there's something magically propping this up. Someone's buying this thing and pushing higher and higher and higher. You notice the big shooting star you had today as well. And now we're currently trading down here on 254. In August 2024, the PE went from a high of 108 to 33,000 in 7 months. That's insane. And I'd like to dig deeper into why that is. Oh, by the way, I do need to make an announcement. I tried to get out of it, but I have a meeting tomorrow I cannot get out of. So no, show tomorrow. Sorry. I have a meeting I got to get into. It's a social media thing where I'm kind of running things. So I have no show tomorrow. Apologize, guys. I will do a show Friday, and if you are, I guess I'm doing a presentation in the Simple Options program as well. I think it's supposed to start at 1 o'clock, and I will, obviously I can't go long because I got to get ready for this show, so I'll probably do like a half hour, whatever you guys want me to talk about in the Simple Options for OTA. What will I do, Steve? You'll survive. You can do it. I have faith in all of you. I tried to get the meeting moved, but they're like, we can only do it this time. It's with an outside agency, so my apologies, but it was just put on my calendar last night, and there's nothing I could do about it, and I need to be there. So no show tomorrow. My apologies. But we'll be back on Friday, which would be a great show. I'm excited about this show this Friday because I have a lot of options that I think are going to expire. MicroStrategy is an interesting one. We saw MicroStrategy take a pretty big dive near the tail end of the session. Bring up your 5 minutes of MicroStrategy, and it was just everything was doing okay. It kind of felt like the morning it was down but holding, and then all of a sudden just kept on tanking. And what's odd about that is if you look at the chart of Bitcoin, it did not follow the chart of Bitcoin. So something different going on there, which caused it to be a little bit outside the norm for MicroStrategy. We'll see if that one recoups. But I've got puts and calls on that bad boy for tomorrow, and or for Friday. Let's see if that sustains it. All right, so let's see. We didn't go through the top 7 here, and we're top 8. Let me do that one real quick for everybody. Obviously, gold is one that everyone is talking about. Notice the volatility and chop right here at the top. That's a sign that people are not clear on where this is going to go. I know a lot of expectation is that gold's going to continue to trend higher, which I'm in that camp. I think the trend is your friend till the bend at the end. Therefore, I think you'll see this continue to move higher. It was down 0.44% today. Your 10-year yield was slightly down, but technically there's nothing exciting about this pattern. The Russell, we already looked at. Boring, sideways chop. Who cares? NASDAQ is better because we've broken out above that area of supply. Now retested 2 days in a row with these bottom tails on the last 2 days candles. See if we can get up here and challenge those all-time highs from back in mid-December. Close to the podium, dollar index, still holding that little area of demand. This is a tough one. It did pierce below it, but didn't close below that area of demand, so I'll keep it in play. Does feel like we're going to get a little bit of a move to the upside here. My guess would be you're probably going to head back up to about 108 if that does move up. S&P was your third place finisher. We've already looked at this one quite a bit. I'll leave my drawings on here and see if I get even remotely close to this. Who knows? Again, I think there's 2 possible outcomes here. One will be the simple retest of that trend line, and then the bigger one would be an aggressive break to the upside here. But I think it would take a lot more to have an aggressive break right now. Crude oil, 0.38%, still choppy and down. I mean, my consensus is that I do think you're going to see it go lower, so it's a question of shorting the rallies, in my opinion. You have a shooting star formation that happened out there today. So if you get a breakdown below those lows, my guess is you'll come and challenge the recent lows from the past 3 or 4 days, right around $70 on crude oil. And then Bitcoin, a little bit of a pop today, but nothing great considering the way we finished yesterday with that big sell-off in the futures market. Still kind of stuck in that yellow box, but it feels like it's getting a little bit weaker and weaker and weaker. Here's where we're wondering, where is Michael Saylor? Where's the guy to come in here and buy $5 billion a day and prop it up? And keep in mind, you've got the sovereign fund of Saudi Arabia and a lot of other big wealth funds from around the world have been making disclosures that they have several $100 million worth of IBIT. They're buying Bitcoin. This should be a driver for price to the upside, but it just hasn't materialized. Really been kind of flat and sideways, which is surprising. The next big catalyst for this will probably be some announcement of a strategic Bitcoin reserve or the digital asset stockpile, which Trump has talked about before. We'll see how that all transpires. So for tomorrow, what do we got? Economic calendar. Ooh, yeah, Thursday. You have unemployment claims coming out for the U.S. You also have natural gas storage, consumer confidence numbers, Philly Fed manufacturing, and that's it for your U.S. Of note here, since we did have the FOMC meeting minutes today, you do have a couple members of the FOMC speaking during regular market hours. That's going to be Musalem, Barr, and Kugler will be speaking for the U.S. markets. Then you have the Reserve Bank of Australia. Bullock will be speaking, but that's going to be later in the day. As far as earnings for tomorrow, we'll bring up your earnings calendar, and we'll show you there are a couple names on this list to pay attention to. Walmart, WMT is the big one. You've got Alibaba, you've got Bookings.com. You also have the Southern Company and NetEase and The Block, or it used to be called Square. Now it's The Block. Now it's XYZ as a ticker symbol. That's your announcement for tomorrow. James predicting Morgan Stanley will buy 26,000 of Bitcoin soon. Great. Buy more of it. Buy more of it. And remember, I mentioned one of the big problems and why we're not seeing companies buy Bitcoin is because the Federal Reserve has made it clear banks can't custody crypto. Banks are not allowed to custody crypto. Because of the rules in place by the SEC and SAB 121, this was taboo. Oh, MS Michael Saylor. I thought you meant Morgan Stanley. Like, great. Do it, Morgan Stanley. If the Federal Reserve is now opening the doors and saying it's okay for you to do business and to custody crypto to banks, then companies will as well. I think there's Granted, we have some companies which are holding crypto, right? And they're not worried about it, but other companies are concerned. They don't want to have any lawsuit from the SEC saying, oh, you're holding unregistered securities on your balance sheets. That's just too detrimental to the company. But because of the changing of the rulings here, some more clarity on crypto, the doorway opens to companies like Microsoft and Amazon and Google and Alphabet and Meta to hold crypto on their books. And remember, those guys have like $100 billion each. $100 billion. Right? They only have to take 1%. $1 billion each would have a significant impact on the price of Bitcoin. I think that's coming next. So we'll see. Come on, Michael Saylor. Do us a solid and just buy some more. All right, everybody, that's going to do it for me. I won't see you tomorrow. I will be in a meeting, so my apologies for that. If you have anything you want me to discuss on Friday's show, I'm excited. I think Friday's going to be a great day. We will have whatever topic you want to discuss. Email me at tradermerlin@gmail.com. And, yeah, there we go. That's it for today's show. Thank you guys so much. Have a fantastic remainder of your day, and I will see you on Friday.